Hey, what is up, folks, and welcome to this quick market review video. In this video, I'm just gonna be doing a run over of the trades that I placed this week. I had a very successful week, so I wanted to share the trades that I took with you guys. And a lot of the trades is the delivery model that I showcased in a previous video. So if you haven't watched that, I would consider watching that before this one. So right now we are on the E-mini Nasdaq 100 on the daily time frame, right? And we've been bearish for very long. So I think one of the trades that I placed this week was actually not on the daily. That was because we tapped into this weekly time frame fair value gap, as you can see right here. We have a weekly fair value gap that we just tapped into and reversed back up, right? We also took these relative equal lows out right here, as you can see. So we have sell side liquidity swept, and we tap a weekly PDRA, right? So what I did was I went to lower time frames. This was probably the easiest setup of the week. And as you can see here on the 2-minute, we had a market structure shift here, and we had a perfect inverse fair value gap entry right there. Right, so my trade looked like this: stop above below this low and profit at that high, right? That is what the trade looked like. And I believe I moved my stops to break even at, I don't remember exactly, but I think at this order block, either this order block or at the beginning of this fair value gap right here. um I myself do not take any partials on my trades. I like to ride out the full position to get as much capital as possible. um so yeah, this is, like, honestly, so easy if you have the patience. So on this specific trade, we were delivering from weekly PD array, right? There we go. Delivering from weekly PD array, dropped to lower time frame to look for entry on first inversion fair value gap after market structure shift. And as you can see, this played out just perfectly, right? This black line represents the weekly imbalance that I showed you we tapped into. And as soon as I saw this inverse fair value gap on the 2-minute, I entered. And that was a perfect and most, I'd almost say this trade has like a 95% win rate if you execute it correctly. So this model really just requires a lot of patience. And you could have taken this one too, this fair value gap right here on the 2-minute, if you wanted to. I personally did not want to do that because I wanted what I usually want when we hit a high time frame PDRA is I want a pullback, or rejection of lower prices, as you can see right here. As you did, we went up, and then I want to pull back, and then we skyrocket, right? So this first phase right here is just to bait all traders into think that we're going up, and then we go down, stop them out. I guess you can see right here in the 2-minute, maybe a lot of people went long here after they saw, like, this displacement right here. Maybe they went long, placed their stops here, right? Stops down here. So we came up, came back down, stopped these people out, and then we displaced up, leaving behind an inversion fair value gap, and then we skyrocketed, right? So usually when we hit a high time frame PDRA, especially if we start to like chop up like this, as you can see, price did right here, I am expecting us to get a pullback, and then we skyrocket, right? And what confirms that is when we inverse this, right? Because as I taught you in a previous video as well, I think it was the drawn liquidity video, I look at to find out where price is going, where the next draw is, I look at what PD arrays we are respecting and which ones we are violating, right? So in this case, we are respecting a bullish weekly fair value gap. That's where it's delivering from, and we are also respecting a 2-minute. Well, we closed outside of it, but a 2-minute BPR, and we just completely violated a bearish fair value gap. And so when I saw this close above here, like I saw this candle right here close above this fair value gap, I knew as soon as we retrace back to it, I would place my entry, right? So that's what I did. And usually what I do is I don't actually have a stop loss when I trade inversion fair value gaps. What my stop is just a mental stop loss. As soon as we close, a candle closes outside of that inversion fair value gap, I'm out. I close my trade because I've tried way too many times where, right, let's say I have my stop down here, right? Let's say I have my stop here, and this candle right here decides to just go down, stop me out. Like, imagine this was a real-time candle. Boom, we come down. Boom, 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 stop me out, and then retrace all the way back inside the inversion fair value gap, and then close in there. I've tried that way too many times. So what I do now is, as soon as we close outside it, I close my trade. Yeah. So I actually have no stop loss when trading this, all mental, which is fine for me. If you can actually stick to your stop loss mentally, then it's fine, right? And yeah, as you can see, we completely skyrocketed, but I like to take profits at internal liquidity. And it was obvious that once we inverse this fair value gap right here, and then continued to skyrocket, it was obvious that we were at least going to hit this high, right? So that's where I took profits. So let's review a couple of other trades that I took this week. So one that I specifically want to show you that was really good. I took 2 trades from that in that time period. Let me find it. It was down here, and then it was through, and again, delivering from a high time frame PD array, right? This is an hourly fair value gap right here. As you can see, this hourly fair value gap, and we dropped it 1 minute, and we find it. Just a second here. There it is. It was right over here. This was on the 2 minute, not the 1, I think. Let me see. Yeah. Okay. So we have an hourly fair value gap right here, right? We come up into it right here. I did not care about a market structure shift. As soon as we close below this 2-minute order block, I'm fine. That's my market structure shift. And as soon as we inverse this, that's my market structure shift. If I see an inversion fair value gap after a high time frame PD array gets hit, that's my market structure shift. That's my indication that we're going to go lower. So that's what I entered on. As you can see, we came back, we closed below this bullish fair value gap, meaning that we inversed it. So this candle right here is where I place my entry. Okay. And then I have my profits right here. That was my profit target right there. So yeah, that was a quick and easy trade that I took. So again, let me write it out. 1 hour fair value gap delivery, right? You can see 1 hour fair value gap delivery, lower time frame entry model, version fair value gap, right? And then we target internal liquidity right here. That's the obvious point. I believe, in my eyes, if we inverse this, we go here, right? So generally what you want is you want only one inversion fair value gap or just one fair value gap in this whole leg. But in situations like this where I'm so certain that we're gonna go further down, you could have taken this actually. I didn't see this, but this is scary because we have such a big 5-minute fair value gap. But because I was so confident that we were gonna go lower after this, or at least get a retracement, like a pullback after hitting this 1 hour fair value gap, that's why I just entered off of it. But I want you to know that the most important thing in this whole, in all the trades that I took this week is where we are delivering from, right? That's the most important things of all. So actually I need to, because we had a lot more trades that were really good to show you. Okay, so 1 minute chart. See right here. Trying to figure out exactly where. Yeah, this right here, exact same setup. Let me see if I drew this correct. I must have drew it wrong. Yeah, so as you can see, we hit this fair value gap to the tick. Right, there we go. This hits it to the tick, guys. Okay. But on the 1 minute time frame, what did I see? Right here. And we did the exact same when we hit it up here. But what did I see here? I'll show you. We hit it to the tick, we come down, right? As soon as we inverse this, now this is perfect because there's only one fair value gap. That's the most ideal setup in my eyes, right? That's so ideal. And what did we do when we inversed it? As soon as we inverse this, I am so confident that we go here, right? So I place my entry here on this inversion fair value gap, right? That actually lines up with another fair value gap right there, right? So what I did was I entered here and I took profit here, right? I could have taken profit here, but I didn't want to get greedy, so I took profit there. Internal liquidity again, you see? So again, it's the same principle. 1 hour delivery, we're delivering from a higher time frame PD array, in this case, an hourly fair value gap, right? We hit it, we come down, we inverse this 1 minute fair value gap. As soon as I get a retracement back up into this inversion fair value gap, I place my entry. I try to get opposing liquidity or internal liquidity, which in this case would be this. You could hold to this, but that's not what I do. That's not my model. So, and actually, what I want to show you is another trade that I took very fast after this. Right? We came down, and because I was so confident that we were gonna go to this daily fair value gap down here, I looked for more shorts after this, right? And what did I see right here? A breaker block right there, right? So what I did was we came back down. As soon as we tapped into the breaker block, I placed a short. I targeted these two relative equal lows here. And as you can see, we hit my take profit in 2 minutes, right? So because my draw was lower, I had a bearish bias. Even though we have came back down this far, I knew we were going to go lower, right? And would you look again? What did we deliver from? We delivered from this. We're delivering from, this is not a higher time frame PD array, but it's a PD array nonetheless. Delivering from a 1 minute bearish fair value gap. We came back down, had a market structure shift that created a breaker block, and I entered off of that breaker block with my target being opposing liquidity. In this case, these two relative equal lows. And so that's what I did. That's where I took profits. And yeah, I just basically wanted to show some more examples of the delivery model that I showed you in the previous video. So I hope you learned something. Now, this is not the only trades that I took this week. I took a few losses as well, but we ended green this week. Of course, and a few other scalps here and there that I'm not gonna show because they're just very minor scalps. So yeah, I hope you enjoyed, and I hope this gave you a little bit more insight to what my model actually is. It's very, very simple. It's just a higher time frame PD array delivery. Then you drop to the lower time frames and look for an entry model. And there's many. There's breaker blocks, there's fair value gaps, there's order blocks, there's inverse fair value gaps. There's plenty of setups, right? So that is basically what I do. I want to add one thing though. To make a setup higher probability, you would want a higher time frame liquidity sweep inside of that higher time frame PD array. Those are like the highest of the highest quality setups you can get. But if you don't get the liquidity sweep, that's fine. But it is higher probability, right? So I hope you got some value out of this video. It was just a quick video showcasing the trades of the week. using that delivery model that I taught you. So yeah, I hope you enjoy it, and I will see you in the next one.